Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 3rd of January 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, as ever, let's kick off with the overnight changes and price moves to be aware of. And we certainly kicked off trading in 2019 with a bang yesterday. Some pretty big moves. The pound sterling, for example, trading shortly before we recorded the video at 125.44.50, down by 0.5% on the day. The Australian dollar 69.3680, down by 0.68%. But I think some of these moves really on the day not really shown the full context, and I've highlighted the weekly column here so that we can get a flavour of what's really been going on. So that was a 1.4% fall effectively in the Australian dollar since just before Christmas. Okay, biggest mover on the day though, Japanese yen, 106.95 trading a short while ago, a move of 1.76%, but the yen had strengthened further than that late last night. In fact, it touched 105. Remember, it was trading with 110, 111 handle just before the Christmas break. The Swiss franc taking money off the dollar, up by around 0.37%. And over the course of yesterday, the Canadian dollar on the back foot against the US currency, down by around 0.44%, or rather the dollar gaining 0.44%, I should say. Dollar index for its part trading at 96.56, actually off the highs from the session, but still better than we entered the new year, shall we say. Okay, moving on then to what's on the calendar, events that may move the markets today. And it's a pretty busy calendar. We've got an ongoing bank holiday in Japan. We'll come back to that in a moment. To come at 8:15 GMT, we'll have the first data out of Switzerland on the day in the shape of retail sales for November. And that's followed at 8:30 by PMI data for the country for the month of December as well. At 9 AM GMT, we shall have money supply data and private loans data for November out of the Eurozone. And at 9:30, we'll have construction PMI for December out of the UK. And then we pause before we move across the Atlantic at 12 noon GMT for MBA mortgage applications data for the week of December 28th out of the USA. And then we start with a series of employment data points. 12:30 first of all then, the challenging job cuts data for the month of December. That's followed at 13:15 by ADP employment change data for November, and at 13:30 we'll have continuing and initial jobless claims out of the US. Now all this data takes on greater significance than perhaps it normally would, because of course we have the December non-farm payrolls coming up tomorrow. Then at 14:45, staying in the States, we shall have the Institute of Supply Management New York Business Conditions Index at 14:45, as I say. At 1500 we shall have ISM even prices paid data for December, and then at 1500 the big one, the ISM manufacturing PMI from the US for the month of December. We shall also have construction spending month on month for November, and at 16:30 a 4-week bill auction also from the US. It'll be interesting to see how the market is prepared to pay up or not for those bill auctions with the US government shutdown continuing. We take a 4-hour break then till 20:30 GMT, when we'll have total vehicle sales data for the month of December, and at 21:30 we shall have API weekly crude oil stocks data for December 28th, or the week thereof. Okay then, breaking news and comment that's caught my eye overnight. First of all then, something that we weren't necessarily expecting to hear. Apple has warned on revenues, citing weak China sales and trimming its iPhone sales forecast for the holiday period. Shares in the company fell by as much as 8% on the news, and that rattled the market. And money moved into safe haven currencies such as the Japanese yen on the back of that Apple statement. Swiss franc also saw gains, as did gold, and the market was really focusing on fears of a global slowdown that could be led by China, of course. And so that's something that we'll be paying ever closer attention to, I think, over the course of the coming weeks. Speaking of China, it wasn't all bad news for China. Their Change 4 spacecraft successfully landed on the dark side of the moon after a month-long journey yesterday. Okay then, food for thought and something to take away with you into the trading day and beyond. Why not think about this? New data reveals that global debt is at its highest ever levels, with some 250 trillion US dollars worth of debt outstanding. The charts here, drawn from a very interesting Wall Street Journal article on the subject, give us some kind of perspective on that debt. A breakdown here in the left chart of the sectorial makeup of the debt between households, non-financial corporates, governments and financial corporates, and to the right hand side, non-financial corporate debt as a percentage of GDP by currency. That's really highlighting who's got the most local US dollar denominated, euro and other denominated debt. Hong Kong is amongst the highest debtors. China is as well. However, most of the debt in China is locally denominated. In Hong Kong there's a large amount of dollar denominated debt, for example, and you can see the breakdown of various other countries here. I suspect the issue really is the green bars, because if we're going to see continued currency weakness and relative dollar strength, then that will be, with perhaps raising US interest rates, then that could become an issue for third world countries and European peripheral countries that may need to pay that debt back. Okay, please take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're uncertain about those risks or the suitability of leveraged investments for you, then please do contact your Pepperstone account representative and do take the time to read this risk warning thoroughly. Thank you for your time today.